Fintech Fest has a theme FinTech Empowering a Global Digital Economy and is providing an in-depth understanding of the latest business, policy, investment, and technology developments within the FinTech landscape globally. We are here today to discuss a very crucial topic, which is the impact of COVID-19 on challenger banks. And for the same, I would like to welcome our esteemed panelists. First up, our moderator, Mr. Himanta, an India FinTech leader, Ernst & Young LLP, and our esteemed panelists, Mr. Andrea Baroncelli, co-founder and CEO, Aspire, Dr. Oliver Prill, Chief Executive Officer, Tide, Mr. Peter Kanin, Director of International and National Initiatives, Innovate Finance, and Mr. Bhagwan Behera, co-founder and CEO, Walrus. Thank you once again to all the panelists for joining in today. And for the audience, you may please post in your questions on the chat box on the right-hand side, and we will take out a few minutes in the end of the session to take those questions. Over to you, Hemant. Thank you so much.
Thank you everyone for joining us today. I think sometimes we need just make it so mouthful. Those are just words coming out and so complicated. But the thing is, in the last 18 months, it's been a nightmarish kind of situation for everyone in our personal lives, in our professional lives. Even the world and the economy has gone through a very, very difficult time, and it seems it's just coming out. So when you come to Challenger Bank or economy, if you look at the numbers just posted before 2019, and for Challenger banks, there was this report by Cornerstone which said it is expected to reach, it is actually about 18.6 billion as far as the market size goes for Challenger banks, and it expected to reach about 394 billion by 2026. But of course, no one predicted a COVID-19 kind of thing to happen and to have a huge impact on the world as it has had. Now, when COVID-19 hit the world, there have been impacts which have been very, very negative, which have impacted our industry extremely negatively, but there have been changes which has created long-lasting behavioral changes which are going to support the industry to even do better than what it has done before. It has just changed the way we live. Now, that's why to discuss of what has been the impact of COVID-19 on the economy and as then extended to Challenger banks, how Challenger banks have actually then reacted to it, supported it, and in fact have played a role in the recovery as we go towards from COVID-19 impact to some kind of normalcy in most of the world, hoping and fingers crossed that there's no wave 3 that hit us. So the idea is to discuss how this entire thing is progressing, what are the steps they have taken, and what is the future that we can look at. That's why we have got these esteemed colleagues and friends from the industry from all over the world. Actually, we have been able to manage 3 time zones to get everyone together. So without waiting for it, let me start with Peter. Peter, in your role at Innovate Finance, you anyways work with different fintech hubs around the world. And from that perspective, you would have had a unique view on the impact that COVID-19 had on the fintech industry and banking across the world. If you can just take us through some key impact that you have seen globally.
Certainly, Hemant. Thank you. And thank you to everyone today for joining. From the international perspective, and certainly from my role here at Innovate Finance, and Innovate Finance being the UK's preeminent UK-based trade organisation for the global fintech sector, what we've seen across the world, and certainly with the markets that we've spoken to over the last 18 months, 2 years, is that there's been a definite reprioritisation of digitalisation of financial services and innovation. Before the pandemic, when we spoke to markets internationally, when we were approached by markets internationally for some of the great thought leadership that's coming out of the UK, the attitude was more, well, this is something that we feel we need to do, and it's something that we should be doing, but you got a sense it was really more of a nice to have as the financial services industry grew. Coming through the pandemic, it's become a priority. It's become a must-have. Many markets are now looking at innovation through financial services and saying this is what we need to do to ensure that we become closer to our consumers. And this has been a process that's been in many ways accelerated by the pandemic. I mean, here in the UK, for example, we saw a huge increase in the number of consumers downloading banking apps, for example, both from the challenger bank sector and the more traditional banks as well. 1 million downloads in the first few months of COVID-19. which was a huge increase in the number of people using their mobile phones, their smartphones, their computers to access their financial services information. And I think that cultural shift is something that's been accelerated, and actually something I think that's here to stay as well. And as we've come through the pandemic, we're seeing actually, yes, the challenges of this awful time that we've been through, but also the opportunity now for many of our businesses to take hold of the situation that they have and to make the most of those international opportunities for growth, and a maturity in fintech as well. Fintech really did raise its game as a community, as an industry, to support not only financial but other businesses across the economy during the pandemic. And I think that's certainly been recognised here by the UK government, and I'm sure by governments around the world as well, the importance of this market and of this sector to deliver in a way that was unimaginable before. So I think that's the major change that we've seen internationally, certainly in the last few weeks and months, as things do start to hopefully improve.
Understood. Thanks, Peter. Okay, moving on to Oliver. Oliver, nice to see you again. We are waiting for you in India to see you again. But Oliver, if you look at SMEs, SMEs have faced the biggest brunt, as to say, of COVID-19, because they were hit both on the demand side, on the resources side, on the supply side. And that way it was a very difficult situation for them. And in turn, of course, since you operate in the same market, you would have seen this very up and close. So I am very sure the situation would have been similar in UK. So if you could take us down that path, tell us what was the impact, and also tell us in turn what was the impact on your bank because of that.
Yeah. So first of all, thank you very much for having me, and good to see you again. Right. I very much look forward to it and to our discussion. Now, in terms of SMEs, I think the first and biggest insight we actually have to offer is that the impact was very heterogeneous. So I think in the press, clearly the press governments quite rightly focused on, people needing credit, extending credit, etc., government support. In the UK, Peter, and you may have more accurate numbers, just even though the government introduced a massive support package, only 1/4 of SMEs actually took up lending. And so really the reason for saying this is we see very, very different segments. We see a segment in the UK, very cash heavy, so leisure, high street retail, etc., that really, really suffered. They needed government support. The government gave them a lot of support. So far, so good. Let's see, how the payback will progress. But that's one part of the sector. We then see a second part that really has not been affected at all, right? So a lot of SMEs are professionals, so IT consultants, your doctor, etc. Now they needed to adjust a little bit in their environment, but they really progressed, right? They really, it worked well. And then there's the third element, and someone probably at some stage needs to size them, right? It's a third conceptual group, which actually hugely benefited. So this Peter outlined this step in digitization. And our view, by the way, we think the market in the UK has accelerated by 3 to 4 years from what we would have seen anyway. And so there are a lot of people that started out e-commerce based business, health based businesses, sort of took opportunity out of, the challenge that was presented by COVID. So very, very heterogeneous. And if you look at a player like Tide, we're a business banking platform, as you know, and we serve now 6% of all SMEs in the UK. But just to put that into perspective, well over half, depending on when you say the pandemic actually started, right? So if you look at March rather than the Wuhan events, we would have in that period more than doubled. Almost 2.5x, right? So there's been massive growth. In the sector and shifts towards digital solutions. So to me, it's a very heterogeneous game, basically pattern. And, the net outcome for SMEs, I think, is actually quite positive because the first sector, the sort of impacted sector has really benefited from government support. The middle sector just soldiered on, and then there's a really new, or let's say a third sector that has really benefited from the the change in digital environment. So a very, very heterogeneous view.
Got it. And before I forget, Oliver, congratulations for your India launch.
Yeah. So we've been monitoring India as well, of course. I mean, and I think this is one of the things Peter was saying, that there are some sort of common patterns across, and I think there are some different patterns. I think India, the beauty of where India was, it was already moving very, very rapidly on the digitization. From what we can tell, that has taken another sort of, step forward in that vein, right? During the COVID crisis. So there's some similar patterns, but clearly different countries reacted very differently and have different states of their economy and so forth. So, the patterns have been slightly different, although there are some commonalities.
Understood.
And yes, we
Understood.
love India, so we're really excited. We're now going to call Peter. I'm not going to do too
Yeah,
much
happy to have you
marketing.
here. Yeah, but Oliver, you raised a very valid point, and that's when I'll move to Andrea. Andrea, so as Oliver said, similar to UK, I think Singapore had one of the most robust rescue packages, so to say, for startups and SMEs, and that's the segment that you operate in. But even after there's a package that is declared, it's important to get that package to the SMEs and startup where it is actually needed. From that perspective, I'm very sure there must have been different changes that would have been required from your perspective as well. One, to support your bank to grow faster, but also to ensure that that support that the government is declaring reaches the base that it is supposed to reach.
Yes, I'm happy to share a bit more on that. Thanks so much, Hemant, to have me. I want to maybe start echoing a bit I think the Oliver comment about the heterogeneity. I think I'm definitely seeing we're definitely seeing a similar pattern. Not only geographically, I mean, we oversee a region. We are in 4 geographies, headquartered in Singapore, as you rightly mentioned, but overseeing 4 geographies where obviously things are, moving in a slightly different way. Singapore has definitely been one of the more proactive from a government standpoint in terms of support, tightly, managed. In the perfect Singapore fashion and delivered. Other markets, slightly lagging in terms of the deployment of support schemes, but obviously moving in that direction. I'm talking about particularly Indonesia, Vietnam, and Thailand, where we have basically operations. If you cut across, I think any geography, we definitely have seen the immediate, let's call it maybe micro effect, which has been pretty common. Let's say the typical, right, the F&B, the events, the traveling agencies, I mean, struggling, all these sort of businesses that are obviously in an lucky, period of time, simply because their consumers are shifting sort of way to purchase and way to do things, or simply because people are restricted. In Vietnam, there is basically a military lockdown. I mean, people cannot move from one part of the city to another. I mean, obviously, Singapore and Indonesia are slightly freer for people to move. But on top of that, which I think is more interesting, there is the whole behavioral and micro, I think, pattern, which is two main things. On the one hand, you see this slightly less risk-averse behavior in terms of, more risk-averse behavior from a consumer standpoint, right? I mean, postponing certain investments and doing certain things in a certain way. But also, which is what I think has been from Oliver and Peter, the huge digitalization behavioral change, which has been unbelievable when you look at the numbers of people moving into businesses moving into digital, basically first mindsets. We were working with some of the kind of digital platforms in the region. I think over the past 18 months, they have seen basically 10x the volumes of new sellers on average per day signing up, which fundamentally means that it's a huge behavioral shift, and this is driving demand across the board, because the moment you start to think about your business as digital first, you start also to think about the providers that you need as sort of potentially digital first in terms of the prioritization you make of those providers. And we are coming up, I think, in a good spot as a basically challenging banking provider, because of the perceived branding that we have, and the solutions that we provide are obviously digital. And so by association, we've seen a huge surge on demand and interest, which I think across geographies. So that's a bit how we perceived it.
I think Andrea, you have to tell us a little bit more. We need to go to the next one because I think Herman has some connection problems.
I can see that. Thanks for pointing it out. I might maybe share a bit more about the second part, which is like the behavioral changes. I think it's pretty obvious that what Oliver said is, I don't have the numbers for Southeast Asia. In our geographies, I think it's not that easy to find an industry report, telling us if we are accelerating by 3 or 4x over the next, in terms of digitalization. But definitely, from our perspective, from our partners' perspective, we've seen basically a 10x on average inflow of sort of new sellers setting up online. On our side, we've seen around 4x basically the inflow of let's say people setting up their business with us compared to the pre-COVID situation, which I think is pretty significant for anybody out there wondering a bit what has been the type of I would say changes before and after. I might even start moderating at this point.
Yes, Andrea, actually, we have connected with Hemant. He's lost connection. He'll be joining back. Meanwhile, if you would like to take it up, or then we can move on to the basic challenges which a challenger bank faces and talk to Bhagavan about it, move it from his input.
Yeah, I'm happy to hear, to hear his stuff.
And then we'll hop in again.
Yeah, sure. I will share a bit. So just for introduction, Walrus is a neobank in India which focuses on the youth. So primarily we focus on students and people in their first or second jobs. For us, the pandemic, we actually launched during the pandemic. We didn't exist, like our product didn't exist before the pandemic. So just around early 2020, like we built our product, we raised a round of funds, we finished all the integrations, and we were about to launch when we heard that the pandemic had hit. So before the pandemic, our strategy was like, since we focused on students and youth, to go to colleges, to go to apartments and create campaigns there or set up booths and sign up users. With the pandemic, like schools and colleges closed, every apartment restricted anyone from outside to enter apartments. So that was a massive shock for us. Right? And in terms of our stakeholders, investors, like there was chaos as to like no one knew like how long this pandemic is going to stretch, or even if there is a need for the product that we were building. So for the first month or two, we stayed lean. Instead of focusing on marketing, we focused more on adding more features to the product and just focusing on the product instead of marketing. The other things that happened is like logistics. Right, so we provide like a debit card to our users, and that is the main product. Like the printing companies, they shut down, and manufacturing of our cards got impacted in a big way. The companies that we used to work with for KYC or for delivering our cards, everyone shut down, right? And so we had to wait for a couple of months for these to resume, and they never resumed. Like last year, they never resumed in the proper, like into a 100% efficient manner. We also had like banks going down, as in banks staff, right? So you like whoever we integrated with, you will find it hard to communicate with them, or someone or the other in their family was impacted and their health or their safety was their primary concern. Then like providing APIs or support to the challenger bank that the bank is working with. So there were initial hiccups, but over the 2 months, we kind of re-strategized where we focused more on digital. Like one is like digital way of acquiring users. Instead of giving physical cards to users, we started focusing more on the virtual cards, right? And like instead of going to schools, colleges, or apartments, Instagram became our source of acquiring users. And what we found was this digital approach was much better than going the physical route, and like it was much more scalable. So initially, when we wanted to launch, we just wanted to launch in one city, but due to the pandemic, we actually launched all over India, because there was like, since you are digital, there's no difference between one city and the other, and everyone is remote to you. So we launched pan India. Today we are 500,000 users, and people using actively. So with the pandemic, what happened is like the physical users, people going outdoors and using a card at a shop or a restaurant, kind of declined. But the online users, like say people buying groceries online, or people watching a movie online through Netflix, or people, instead of going to school, subscribing to e-learning courses, or instead of going and watching a match outside, people focusing on playing games on their phones and spending money there. So a lot of we saw a lot of these physical spends or outdoor spends going digital, and like people were spending at more on online sphere, right?
Yeah.
And not only with us, I think like with other similar fintech companies as well. I think people, since they were not spending that much going outside, people saved money, and that money they were either investing in mutual funds or even like crypto. What I hear from other crypto startups is like during the pandemic, like crypto has really become massive here in India. Like the money that people have saved, that they are putting into Bitcoin and Dogecoin and etc. Right. So
did you see on this one? Sorry to interrupt you, but on your great discourse, you said you launched Pan India. Did you see the pandemic impact different parts of India differently? Tier 1, Tier 2 cities, Tier 3 cities, different geographic parts of the country. Did you see big differences there, or was this reasonably homogeneous?
Yeah, it was homogeneous. Like the impact was universal. I think like to deal with a neobank, you just need to have a smartphone, and like you get your card online, you get everything online. So it doesn't matter which city you are in, and especially the tier 2, tier 3, like we saw more take up there, because they were the ones who needed these kind of services more.
Yes, it's fantastic. So it's basically the smaller cities in particular that took the steps forward, right, in the more rural.
Yeah,
very exciting.
Yeah, since we focus on the younger generation, like what we see is in the smaller cities, the parents or like the older people may not be that educated, or they may not have a smartphone. So these younger people are the one who do these transactions for their entire family. So whether it's about investment or buying grocery or buying for their entire family, they are the ones interested with the whole doing this whole digital transaction. So when they get a card or they get a way to do digital payments, they do it for their whole family.
Yeah, very, very exciting. Any other sort of, while we wait for the moderator to come back, any other sort of insights that you have in terms of how India specifically sort of changed? You talked about some of the general trends, but, do you see anything in the competitive landscape? You talked about consumer behaviors, competitive landscape, different, product usage. Any of those insights?
So just before pandemic, I think like banks were quite reluctant to do a lot of things like doing digital KYC, right? So banks were mandating that you need to go to the customer's home and say hi to him, take his photo, video, collect physical papers, and this was a norm, right? So now with pandemic, even larger banks realized that this was no longer possible. Like earlier, we as neobanks, we used to chase the banks that, hey, when can we do some kind of a digital KYC? And they were like, okay, not anytime soon. But with pandemic, their mainstream customers were also impacted. So everyone was taking steps towards bringing in digital KYC, bringing in digital way of customer support, and with everyone going digital, it like people stopped going visiting banks, and everyone wanted to get some kind of a support or some kind of a service online. So banks had to like relook at their strategies in terms of going digital, or what kind of approach they take towards the customers, and that actually helped help neobanks like us, because we thrive on digital. We cannot afford having offices where people come and visit and or paperwork. So that was there. I think credit was another most sought after instrument during the pandemic, because people needed money to pay rent, etc. And the government also introduced a moratorium that interests could be you could pay those later, and most banks allowed that, where if you had a loan or something, you could pay off those interests much later once the pandemic goes away. So that was quite useful to the people. Initially in the first few months of the pandemic, digital transactions were quite impacted. Either people didn't spend or people hoarded money, right? But in 2-3 months of the pandemic, transactions were back again. Maybe they were converting from physical to digital, and they were meeting the same levels as pre-pandemic. So with India having services like UPI and all, that was really useful for people, because you could actually make payment to someone without actually touching something or carrying a card and tapping, or especially when you want to avoid contact with another person, just being able to scan a QR code from far and make a payment was really useful. And most people preferred a UPI payment versus a card payment during the pandemic, right? Yeah.
Yeah, very interesting. I mean, given I think we're still waiting for the moderator, maybe I can sort of ask more questions that I find quite hugely interesting, which is, and please, Andrea and Peter, chip in. But what would be your outlook for where India is heading? We actually have Herman back.
We have him back, yes.
Yeah, so apologies. We've been having a great conversation, but it's good to have you back.
Hey, Hemant.
I think maybe meanwhile, Oliver, you can just continue, and probably we can discuss.
Okay.
Further.
No, I was just asking, what would be, your outlook for India? I mean, is it? Do you consider it over? We have Diwali coming up, right? With, at least in the UK, these sorts of events have been, let's say, been quite conducive to creating new waves. What's sort of your outlook where things are heading?
Yeah. Right now I'm in Bangalore, and if you go out, you will see it's like nothing ever happened. People are back to normal and quite optimistic about everything. But just looking back into history, a couple of months back, it was the same outlook, and then the second wave hit, and it came into it was such a deep problem, and there was chaos everywhere, and people had never imagined that. Right now, people are cautious. People are optimistic that the pandemic has decreased, and offices are opening up and shops are opening up, and people are careful, but people are moving ahead. But still, people are cautious that a third wave might come, might happen in the next few months or so. But people have kind of learned how to deal with it, learned how to take care of themselves, and especially with the vaccinations, I think most of the people have tried to make sure that they are vaccinated. So we think right now, with people having taken the vaccines, the impact might be lesser. So people are more optimistic towards investing into like say taking up a new office or hiring more people or opening offices or launching new partnerships or taking up new projects. I think people are optimistic and going forth thinking that they have lived through two pandemics, and the third they are kind of prepared, and I think like with the vaccines probably they will be live through it as well.
Interesting. And Andrea, in your part of the world, sort of Singapore and further sort of Southeast Asia, I mean, what's sort of the outlook? How are you looking at it? Is it over? Is there another wave on the way? Have people learned to live with it? What's sort of the perspective there?
I think it's really country specific. I mean, Vietnam is having the biggest outburst right now. So I think basically most cities are shut. There's again basically lockdown. People cannot move across different areas of cities and part of the country. So that's basically the peak. The country has not seen anything in the past almost kind of 1 year and a half, but in the past two months there was an outbreak. So Indonesia is more constant. I think is relatively. Situation is not great. I mean, vaccination rates are not, growing so fast, but at the same, it's more stable. Singapore is going back now into another lockdown. So I think, and Thailand is relatively stable as well, although people still kind of relatively restricted. So I would say that it's still wait and see. I don't think that here anybody is able to point to a clear sort of line, connecting two dots, because the dots on the other side of the line is still moving quite a bit. So that's a bit what.
Very interesting. Herman, are you able to take back the reins of leading the panel, or should we go to Peter to actually do the hardest bit, which actually to say is the UK?
Well, I have a question really for each of you in terms of your experience leading, a challenger bank. Is the challenge from a consumer point of view that, as life does return to some version of normality, do we lose the lessons learned from the last 18 months in terms of those habits? Is there a danger that people, as we we start to act as we used to socially, do we revert to old habits in terms of our banking, in terms of our payments? Do we also lose perhaps some of those inroads we've made with governments and with other institutions in terms of the ground gained by our sector? To each of you really, what's your opinion on that? Andrew, as you have the mic open, why don't you start?
Yeah, I was actually thinking about what's my view on that. I would say intuitively, I would say that this kind of behavioral changes are hard to flip back once they are twisted in one direction. So my guess is that we are basically seeing a macro trend. We are not seeing a, how do I call it, like a roller coaster type of thing. It looks like a macro trend getting accelerated that started a long time ago, and this extremely extraordinary and a bit crazy period, with this COVID has been making people move and decide on things quite fast compared to the natural trajectory. And again, it's what we said before. I think Bigaban was saying, we're basically seeing, kind of more traditional, right? I mean, in incumbent players, like changing the way they do things. I mean, that fundamentally is the guy on the ground, right? That when the officer asks him, "Hey, please, we need to go and do the whatever authority, scan and print this document," they say, "But I cannot go out," right? And all of a sudden, the whole chain of command breaks, because how do we act on this? How do we change the policy that has been there for the past 50 years, right? And I think these things are just snowballing.
I mean, certainly here in the UK, I'd agree with you. I think it's accelerated. It's a trend now in terms of the way organisations and people behave. I think it's very hard to go back on some of those habits. And certainly what we've seen in the UK over the last year is, that reliance on fintech companies and the challenger banks to fill the gap, to provide something that perhaps more traditional service weren't able to do at speed, and to improve the infrastructure to enable them to do that as well. I think there has been a slight shift in terms of the mentality of regulators and government, but I think there's still some work, obviously, to be done. Oliver, would you agree, based on your experience, that whilst we've seen some change, there's probably still work to be done?
Yeah. Yeah, Peter, I think as you and Andrea said, I think the consumer, in our case, right, the small businesses, I think, that is a macro trend. It has accelerated. It's very unlikely to go back. I think you picked, or you touched on a couple of sort of interesting second order effects, right? So has the government really leveraged fintech and all of that? And I think in the UK, right, and you're part of some of these discussions, I think the jury is out, right? I mean, the banks really the government in the UK very much relied on the large established banks to distribute their emergency bit, not really fintech. Very different to India, where, during that time, the Reserve Bank of India has done a lot of policy changes and so on to really embrace it. Having said that, I think the UK government is actively looking at it, and, there may be a positive outcome. I think the net outcome, the Khalifa review and other things are coming on it. But I think governments acted very differently. And if I look at, places like India, I think that they have been in many ways way ahead of the curve on the government or the state institutions, let's say, leveraging the digital and the fintech. The second sort of second order effect is really around investors. So the other thing is, we've seen anyway, driven by low interest rates, a lot of funding going into the sector. Now, of course, VCs are seeing the trends of faster digitization. So there's a reinforcing loop, right, where more and more money is coming into the sector. There's almost a self-fulfilling prophecy, right, of things accelerating. Let's hope not beyond reason, right, but certainly accelerating. We just raised a massive round where we had sort of on the second part to put 90% to secondary, because we just couldn't, right, absorb so much primary that was sort of on offer. And so, I think there's a lot of money coming in that further drives it. And then I think the third one, as Andrea was saying, the established players. So Tide, we never took the view it's fintechs versus the banks. I think in many ways that's sort of legacy thinking, actually. It's going to be a rich ecosystem. There will not be one model that sort of dominates. There will be, different bits and pieces. And I think some of the banks got a wake-up call during this period. And I think that in many ways for the economy is a good thing. So I think it will further lead. The third trend I see is that there will be continued let's say, integration of fintech versus bank. I mean, that divide will become increasingly irrelevant, where it's really just different business models properly serving different segments from the population. So net, I think when we look back from it, from a fintech point of view, I think that the crisis, although no one would have wished it, but the crisis actually was net positive for fintech. I mean, there's no question about that, right? And it will last. A lot of these effects will last.
Yeah, I'll just add to it. So I think in terms of India, I think there is no going back, whether it comes to consumer behavior or how banks are looking at it. So in terms of consumers, I think even starting with cash during pandemic, just going to an ATM is like really hard, or even finding money in an ATM was hard, right? And even for banks to refill ATMs with cash, it didn't really happen smoothly. So most people learned how to do transactions digitally, whether using UPI or using online means, right? And right now, having gone through that, people find that as a much easier way, and that's like a habit that they have developed, and they don't need to go to a bank and stand in front of ATM in a queue to withdraw cash, because they don't need to do that, right? So in terms of people becoming efficient, people becoming more digitally literate, people who hadn't downloaded any UPI app now have UPI app on their phone, or people who didn't have a smartphone today have some kind of a smartphone because they know they cannot live without it, right? And once you have tasted blood, there is no going back for you, and going back into the traditional world of dealing with cash, or dealing with delays, or having the patience to deal with these things, right? So I think the damage is permanently done, and like people have experienced what it can be in the whole digital new world. And even for the uneducated, like they have learned how to like if you see, like if you go to a small vegetable seller here in India on the streets, earlier they used to accept cash only. With pandemic, no one has cash to give them, so there is no way for them but to have a smartphone, or have at least a QR code on their shop, so that they can receive payments, right? And once they have that QR code, and they see that they do not need to give back change, they do not need to keep accounting, everything happens on their own, right? So right now, whether pandemic stays or goes, the efficiency that people have realized will stay on, right? And people will teach others, and like the whole digital boost that has happened will linger on for long. When it comes to banks, during the pandemic, it was more of a survival for the banks. Like banks tried to create processes, and tried to adapt projects that help them survive, right? Like say, for example, a KYC, people explored, is there a quick digital KYC that they can do? So a lot of these digital KYC startups were in demand, right? And now all the banks are already linked with digital KYC, and people find that this is like, banks find that this would be more effective, right? So if you want to go to a person's door and do a KYC, it might cost you say 200 to 300 rupees. But if you want to do a digital KYC, it might just cost you 20 rupees for the bank to do that KYC, right? So that's already 10x like cost, like you save money, right? And there is like no reason why banks would go back and do the physical KYC again, right? What banks also realized, that their staff could like serve customers remotely and operate remotely, right? And a lot of customer interaction could happen through WhatsApp, and people found that that was quite efficient from the bank's perspective, as well as the customer perspective. Instead of having to courier documents, you could just take a photo on WhatsApp and send it to the bank, and they started accepting it as an official document. And right now that continues even after the pandemic. And we think like it will become more efficient, and more digital means will come up even on the bank side. And any digital projects that banks have undertaken, or neobanks have undertaken, will continue, because they are better than the traditional ways of doing things. So I think it's hard to let go the efficiencies that you have built over the last 18 months, and it will continue.
So I think we're out of time. I'm not sure whether the organizer, Peter, you want to say?
We still have about 5 minutes, Oliver.
All right, okay. So maybe my calendar includes. So Peter, do you want to continue to moderate, or maybe should we just say closing questions?
I was just going to say, one question I suppose we haven't collectively tackled is around investment, and what's the impact we've seen in terms of the funding coming into the sector, coming into our own businesses as a result of the impact of COVID. Certainly from the UK perspective, we've seen a remarkable increase in investment into fintech, and in the first half of this year, we saw a record amount of investment, $5.7 billion US in terms of predominantly VC investment, but a mixture of investment into the UK fintech sector in particular. Has this been replicated in your own markets and in your own businesses? Are you still seeing these levels of investment coming through despite all the chaos?
Yeah, for India, like the first year, like the first wave of pandemic, everyone went back, and there was not much real investment happening. But in the second wave of pandemic, kind of investors realized that most startups kind of have learned to live through it and have been growing in spite of COVID, and especially digital has been increasing due to COVID, right? So whether it's about e-commerce or e-learning or digital payments, all of these industries are on the rise. So the second, so basically in 2021. Investments in India are actually on the rise. They are actually even more than pre-pandemic days.
Andrea, is it same across your region as well?
Yeah, similar. So similar pattern. So definitely digital businesses, right, including fintech, as definitely having a net positive inflow of investment for obvious reasons. Probably is the same reason why we discussed about the heterogeneity of the phenomenon, right? Because there are businesses that have an edge in a world where people are more digital, and these businesses are obviously getting attention from in terms of capital allocation, which I think it's one of the aftermath, and it's definitely happening, I think, across the sector.
And Oliver, I mean, we Tide's success during this period, we've all seen it, and congratulations to you and to everyone on the call for the success that we've had during this period. Are you seeing a similar trend across your business in terms of the support you're getting?
Yeah. So we had a Series C, and there's just a lot of demand, and the final bits of it we actually pushed into secondary, because I think there are a couple of things, Peter, I think one needs to call sort of out, right? In the beginning, by the way, and Andrea, the same thing was in the UK, right? In the beginning, investors were very nervous and so on. No one knew what was coming, but then within a couple of months, people realized that this is probably the biggest discontinuity, right, that we could have hoped for. However, what I would end, Peter, is with a sort of couple of cautionary words, right? So there's a lot of money flowing in, and also by players, let's say, that no longer look at fundamentals, right? So they look at structuring deals, they look at just multiples based on sort of air being built on air, right? And I would strongly encourage. That's what we look at is let's stay true to low structuring of deals. Let's make sure that the fundamentals are right of businesses, rather than to try to drive headline valuations. Because those of us that have a bit around the block do realize there is a danger, right, that bubbles do burst, and there is some elements, if you look at some of the bits, that does look a little bit detached. So I think it's good that money flows in. I think there's real reason for doing that, as you say, as we all agreed, right? Digitization is here to stay, and it will come, will continue at force. But we must make sure that there's not now an oversupply by over-enthusiastic amateurs trying to sort of drive up excessive valuations. That is really something that does worry us a little bit, and where we're saying, look, we just need to make sure that unless there's an exit, the discipline should be on the on the company side of steady valuation growth based on fundamentals, rather than structuring and valuations out of multiples that have been maybe never been sustained by the other players that they're being based upon. So I think there are a few warning signs that I would leave. And, of course, I come from the privilege of just having completed a round, so we will wait a little bit for the next round. But there are some worrying trends out there. And I think all of us as fintech leaders should make sure that we end up, right, with a healthy investment environment, so we don't end up with the .com scenario where people had come in that didn't really know what they were doing. They inflated things, and then things, went the wrong way. Here, we should have to stay on the fundamental trend, and sometimes it's better to stay with those fundamentals than to sort of, base air on air, right? So with those cautionary words, I think we filled in the rest of the time. Is that right?
Yes, pretty much that. And I'm really happy that we got such amazing insights from all of you, along with, again, the red flags and the cautions that we need to be careful on and cautious about. So thank you so much. Unfortunately, Hemant couldn't join back, but we're just in time, and we were able to cover almost everything, all the questions that we had to. So thank you to all the panelists for joining in today, and thank you to the delegates as well. For the delegates, here's your chance to become a proud owner of RuPay on the go. So please visit the NPCI booth, which is there on our platform, to apply for your complimentary RuPay on the go device. And just drop by to know more details. And even the speakers can drop by to know more details on the platform. Thank you so much again. Thank you, everyone. Thank you, Oliver. Thank you, Peter. Thank you, Bhagwan. Thank you, Andrea, for being a part of this amazing panel. Thank you.
Thanks. Bye.
Bye-bye.
Cheers. Bye.
Cheers.
Everyone.
Bye.